Hello, I am Mark, also known as the Stock Market Jobber, and today I want to talk a little bit about what we call the bid and the offer. Bids and offers exist for every stock at any given time, and you should know what they are. The bid is the highest price, and I said stock, but it's the same with options and cryptos and whatever security. Now, the bid is the highest price anyone is willing to pay at the time for that stock that's willing to show it in the public markets. The offer is the lowest anyone is willing to sell at. So if I just bring up this quick quote of Ford here, and this will probably change pretty quickly, but notice it's a 12.10 bid and a 12.11 offer. So if I say was going to sell 100 shares, I would receive 12.10. If I was to buy 100 shares, I would have to pay 12.11. It's the bid and the offer or the ask. Offer and ask can be used interchangeably. Now, in a company like this, it's a very liquid stock. As we can see, it's traded almost 4 million shares today, and it's only 10 o'clock in the morning. So if you're buying or selling something like this, the bids and the offers are so close. It's generally really not an issue. But I want to bring up some Ford Motor uh, option quotes because here we have some wide spreads. Now, the spread is the difference between the bid and the offer. So we saw at Ford Motor Company, they got a 1 cent spread. That's nothing. Look at some of these options here. So these are, and I just brought up Ford randomly. I mean, I was just looking at it before. I mean, we could talk about this on any security. And just one thing from the institutional world, you might have curiosity because I've seen a lot of mistakes happen because people don't understand this simple little thing. When you're buying something, you say the price first and the number of shares second. When you're selling something, you say the number of shares first and the price second. So if I was to call up one of my brokers when I was back in my big shot institutional trading days, say I wanted to buy 1 million shares of Ford and I was willing to pay 12.10, I would say, hey, I got a 12.10 bid for 1 million Ford, or 12.10 for 1 million Ford. Just saying that, you're telling the broker, okay, I want to buy. Now, say you want to sell. Hey, I got 1 million to go at 12.10, million at 12.10. All right. So when you're buying, you say the price first and the amount of shares second. When you're selling, you say the amount of shares first and the price second. I've seen a lot of errors happen because people got that confused and they said it in the wrong order. Anyway, so this is Ford, and I know a lot of you are options traders, and we could see if we're trading options that are liquid, meaning there's a lot of volume that are close to the strike price, we can see we got very narrow bids or very thin. I'm sorry, very narrow spreads. The spread is the difference between the bid and the offer. So here we got a 72-cent bid and a 75-cent offer. So this is a 3-cent spread. Now, if you're trading things that are really liquid, you generally don't have to worry about this, but you should know it anyway. If you're trading stuff that's illiquid, this is imperative that you know this stuff. Now, let's just go find an option here that's a little bit kind of out of the way with a really wide spread. And 5 cents, 10 cents. Well, let's see. We'll find a good one. Okay, now look at this. Now these are the puts. Okay, so this is the 1735 put, but forget about that. I just want to show you something interesting here. The bid is 470. The offer is 490. That's a huge spread. Okay, you go up here and you can see bid and ask. Ask and offer are the same thing. So we come back down here and we have this huge spread. There's plenty of them here. So let's just pick pretty much anyone. All right, let's go to this one here. So the 2035 puts. Look at this spread. This spread is like absolutely enormous, 755 to 905. So if you sell your contract, you're going to receive 755. If you buy, you're going to pay 905. Now this can be kind of confusing. This has not traded today. This is very far out of the money. And if you can see over here, volume, if you go down on the volume, you can see nothing is traded today, right? So we'll get to that in a minute. But just say you hold these puts and you're thinking about selling them. Well, if someone comes along and buys something, they're going to pay 905. So you're going to look at the quote and you're going to see the last trade. It's going to say 905. And you might think, wow, I would love to sell my put at 905. And you call your broker, or more precisely, you go online and you put in the order and you hit sell and you find out you got 755. And it's like, what? Well, the last trade was on the offer side. So they're showing the offer price. If you go and you sell, you're going to receive the bid price. And then the last trade showing would be the 755 trade. So you may want to buy and say, wow, this is traded at 755. I would love to pay that for this put option. I'm going to go buy it. You go and you buy it at the market, you end up with a 905 price. And it's like, what the hell? It just traded at 755. So you sell on the bid, you buy on the offer. Something else to look at too is the last trade. Notice how the last trade here is 525. So this is way away from the current market. How is it possible that this could have traded at 525 the last time this contract traded, and it's 755 to 905? Well, you don't know when this last trade was. This trade could have been 2 weeks ago. It could have been yesterday. We just don't know. So this last trade has no bearing on the current market, or it's got no relevance to the current market. So you see, oh, 525, I'd like to buy at that. And you end up paying 905. And it's like, what just happened? Well, you were looking at an old trade, or what we call a stale quote, and the offer was 905. So hey, you went into the market and you paid the lowest anyone was willing to sell at. So just be aware, bids and offers. The bid is the highest anyone is willing to pay you at that given moment. The offer is the lowest anyone is willing to sell to you at that given moment. If you're trading something really liquid, like Apple, you really don't need to know, because the bid and the offer are so close. By the time you hit that enter button, what was the bid could become the offer, and so forth and so on. But if you're trading something that's very illiquid, you should really know this stuff, because I've seen some newer traders get really burned because they just didn't understand the mechanics. They say, well, I wanted to buy it at 5 and I got my confirmation and I paid 705. What the hell? Well, that's because they're looking at the last trade, and the last trade has no bearing on the current market. All right. So that's it, everybody. Hope you picked up a little bit of good information here, and I will see you soon. Stock Market Jobber tuning out.